Many Americans are getting itchy to venture abroad. Not necessarily to travel outside the U.S., but rather to invest outside the U.S., explains fund expert John Bonnanzio, editor of Fidelity Monitor Insight. The temptation to do so is apparent. Almost all of Fidelity's foreign stock funds, save those most focused on the emerging markets, are in positive territory this year. So we're being asked, why don't you hold any in your model portfolios? Before looking ahead, let's look back. Over the past full 1, 3, 5 and 10-year periods, our sticking close to home has been a good investment decision. In fact, over the past decade, not a single one of Fidelity's foreign stock funds outpaced the S&P 500. And, very few outperformed any of Fidelity's domestic stock funds. That's why we're always watching for upside opportunities abroad, which is a big neighborhood. In fact, 42% of the world's public equity market lay outside America, while the U.S. and Europe should experience similar GDP growth in 2022 and 2023. We're far ahead this year. It's thought that Europe's recovery could be even faster if it can get a better handle on COVID. Monetary policy in the eurozone has been supportive, but the region's divergent needs are a challenge for its central bank. Still, some investors are already betting on recovery. After a 6-year hiatus, mutual fund flows into Europe from U.S. and Asian investors have turned positive. The Pan-European 600 index is up 18.6% this year versus 21.6% for the S&P 500. For the past 12 months, their returns are 31.8% and 31.2%, respectively. And should Europe's economy rebound like ours, higher share prices should follow accelerating earnings. As for Japan, optimism springs eternal, but reality has a way of ruining things there. Like so many other countries, COVID is a wild card. And with exports increasingly dependent on Asia, epidemiologists may be better market forecasters than the usual market tacticians. And should you decide to go abroad, it's also worth noting that global trade has made U.S. and foreign stock funds more correlated. If your fund holds Apple Computer, for example, roughly 2/3 of its revenue is from outside the U.S. In fact, of the 11 S&P 500 sectors, tech derives the most revenue, 57%, from abroad.